These are 5 educational tax credits the wealthy use to cut taxes while helping kids. Most people think there's no way to legally reduce their tax bill while actually doing something good for their community. But what if I told you that there's a strategy that the wealthy have been using for years that does exactly that? Educational Improvement Tax Credits, or EITC, are like a secret weapon that essentially redirects your tax dollars to education while getting a massive tax break. And no, this isn't about some complex loophole or questionable scheme. In the next few minutes, I'm going to show you exactly how these educational tax credits work, why they're so powerful, and how to implement them in your own strategy to potentially save thousands of dollars. But of course, get professional advice from your accountant. So let's get into it. So the first opportunity with educational tax credits is what's called the State Level Education Improvement Tax Credit Program, or again, EITC. Think of these as a direct transfer of your tax dollars. Instead of sending money to the state's general fund, you're sending it directly to educational programs that you care about. And the best part, you get a tax credit that's almost dollar for dollar in many states. For example, in Pennsylvania, their EITC program allows businesses to donate to approved educational organizations and receive up to a 90% tax credit for a 2-year commitment for eligible contributions. These contributions are made to nonprofit organizations that either provide tuition assistance to students from low-income households or innovative educational programming from K through 12 students. That means if you contribute $10,000, you can get $9,000 back as a tax credit on your state tax bill. Now let me remind you, this isn't a deduction, it's an actual credit. That's money straight back in your pocket that would have gone to taxes anyway. So let's think about this for a second. You're paying these taxes regardless, but now you get to decide where that money goes instead of some bureaucrat. It's essentially having a superpower over your tax dollars. I've seen client faces light up when they realize they could support local schools or scholarship programs they care deeply about while simultaneously slashing their tax bill. It's one of those rare moments in financial planning where everyone wins. You, the schools, the students, and even the government. The second opportunity comes with educational tax credits, and it's called the American Opportunity Tax Credit, or as I like to call it, the college student's best friend. This credit is worth up to $2,500 per student for the first 4 years of college, but of course they have to be qualified education expenses paid for by the student. And here's the kicker, it's partially refundable. That means even if you don't owe any taxes, the government might still send you a check for up to $1,000. Let me put this into perspective. If you have 2 kids in college, that's potentially $5,000 directly reducing your tax bill every year. That's like getting a month or 2 of mortgage payments back. And the income limits are surprisingly generous. You can't claim the credit until your modified adjusted gross income is $90,000 for a single person or $180,000 for a married filing jointly couple. So families with substantial income can still benefit from these policies. It's a great feeling as a CFP when clients practically jump out of their chairs when we find thousands of dollars that they would have missed out on otherwise. One client even used the savings to buy his daughter her first car to actually go on campus with. This brings us to the third opportunity with educational tax credits, and that is called the LLC, or Lifetime Learning Credit. This one is a game changer for anyone who thinks education stops after college. This credit gives you up to $2,000 per year, not per student, but per tax return for any kind of post-secondary education, including undergraduate, graduate, and professional degree courses, as well as courses to acquire or improve job skills. The beauty of this credit is there's no limit to the number of years that you can claim the credit. You could literally get this credit every single year of your adult life if you're taking qualifying courses. I recently served a client who was transitioning careers in her 50s and taking night classes to build her new skills. Initially, she had no idea this tax credit existed and was thrilled to discover she could reduce the effective cost of her education by $2,000 annually. That's like getting a 25 to 30% discount on tuition depending on where you're going to school. For empty nesters or professionals looking to upskill, this credit is an absolute no-brainer. It essentially means Uncle Sam is subsidizing your lifelong learning journey. So for the fourth opportunity with educational tax credits is 529 plans. 529 plans are education saving plans, aren't tax credits themselves, but they're like a Swiss Army knife of education planning that makes all of these other strategies work even better. Here's what makes them so powerful. Every dollar of growth in these accounts are completely tax-free when used for qualifying education expenses. I'm talking potentially decades of compound growth, totally tax-free. Let me show you what this means in real numbers. If you put $10,000 into this account when your child is born and it grows to $30,000 by college age, that entire $20,000 of growth is completely tax-free. That's like getting a $6,000 plus tax break, assuming you're in the top tax bracket. And they're not just for college anymore. Recent law changes expanded qualified education expenses for K through 12 programs, apprenticeship programs, and even student loan repayments with a lifetime limit of $10,000. I've worked with a family where the grandparents put $30,000 into 529 plans for each grandchild. Not only did they remove that money from their taxable estate, but by the time the kids reached college, those accounts had more than doubled. All that growth completely tax-free, and the look on their faces when they realize they've secured their grandchildren's college education while saving tens of thousands of dollars in taxes is absolutely priceless. So the fifth opportunity with educational tax credits is a Coverdell Education Savings Account. Think of Coverdell ESAs, or education savings accounts, as the specialized tool for K-12 education that covers things that 529 plans just can't touch. When the contributions are distributed, they're tax-free as long as they're used for qualified education expenses. This includes tutoring, educational technology, internet access, and even specialized services for students with learning disabilities. Now, while you are limited to $2,000 in contributions per year per beneficiary, the flexibility is incredible. So if you need a new computer for your child's schoolwork, it's covered. Special education software, covered. After school enrichment, it's all covered by the Coverdell. One client's son recently needed specialized reading instructions that wasn't covered by their school's program, and they were able to use a Coverdell ESA that had been previously established in order to cover these expenses. It was a great relief for them to know that the money that had been set aside years ago wasn't going to waste. For families with specific educational needs, combining Coverdell ESAs with the other strategies we talked about can create a comprehensive approach to funding education while maximizing benefits. It's like having an entire toolkit solely designated to funding your child's education. Those are the 5 educational tax credit opportunities that can help reduce your tax burden while supporting yours and your child's education. Now that you understand how the wealthy are able to redirect their tax dollars to educational causes they care about while simultaneously reducing their tax liability, this is a great way for you to get started to potentially do the same. But knowing about these credits is only the first step. Creating an integrated tax strategy that maximizes these benefits takes careful planning and implementation, especially when coordinating multiple credits and accounts. Many of these strategies do have specific timing requirements and documentation that needs to be accounted for precisely. That's why I want you to click the first link in the description below to schedule your first meeting with Park Lane Financial Group so we can discuss your education and tax planning strategy. During this session, we'll look at your specific situation, identify all of these educational strategies that could best benefit you and your children, and decide how and when to implement them. We'll discuss how to implement these within your broader financial plan to make sure that paying for your child's education is affordable, and for those amounts in excess of what you're able to help your child achieve, we'll help you to make a plan to take care of it. So if you're ready to take control of your tax strategy, click that link in the description below now. I look forward to helping you save on taxes while making a difference in your education. Thanks for watching.